Imagine calling your bank because a payment failed and being told, essentially, we can't discuss that. Not won't, can't. Here's something that catches people completely off guard. There's a specific federal law that makes it a criminal offense for a bank employee to tell you the actual reason your account was frozen, if that reason involves something called a suspicious activity report. The person on the phone isn't being evasive to frustrate you. In a real legal sense, telling you more could be a federal crime on their end. This isn't a new rule exactly. It's been federal law for years, but it affects more everyday people than you'd expect, and almost nobody explains how it actually works, what your rights still are, and how to get through it as quickly as possible. Let's go through it properly. Why this happens, the law behind the silence. Under the Bank Secrecy Act, financial institutions are legally required to file a suspicious activity report, commonly called a SAR, whenever they know, suspect, or have reason to suspect that a transaction involves funds from illegal activity, is designed to disguise the source of funds, is structured specifically to avoid reporting thresholds, or simply lacks any clear, apparent business purpose. This report goes directly to a Treasury Department bureau called the Financial Crimes Enforcement Network, or FinCEN. Here's the part that actually explains the silence. Under federal law, specifically 31 U.S.C. Section 5318, once a SAR is filed, it becomes illegal. Not just against policy, actually illegal, for any director, officer, employee, or agent of the bank to tell anyone involved in the transaction that a report was filed. This is sometimes called the anti-tipping off rule, and it exists specifically to prevent someone under genuine investigation from being warned and moving or hiding funds before authorities can act. The confidentiality is treated so seriously that the regulation covers not just the existence of a SAR, but even information that would reveal one exists, meaning a bank employee generally can't even hint at it, confirm it, or deny it in a way that gives away the truth. Here's what this means for you practically. If your account gets frozen and the explanation you get sounds vague, generic, or oddly evasive, there's a real chance the person you're talking to genuinely cannot legally tell you more, not because they don't know, but because telling you could expose them personally to serious legal consequences. What actually happens during a freeze? It's worth being precise about what a freeze does and doesn't do, because the two get confused constantly. A freeze doesn't take your money away from you, and it doesn't mean the funds are gone. What it does is block everything that moves money out of the account. Automatic bill payments fail, scheduled loan payments bounce, pending transfers don't go through, and any card tied to that account typically stops working entirely. For someone living on a fixed income, relying on that account for automatic mortgage or rent payments, medical bills, or basic living expenses, this is exactly where a freeze goes from inconvenient to genuinely serious very quickly. Even though, legally, the money hasn't disappeared, and in most cases isn't actually the target of any wrongdoing on your part. It's also worth knowing that a SAR-related freeze is only one type of account freeze, and it's not the same as the others. If a freeze is instead due to an IRS tax levy, that process actually has a defined, predictable structure, IS. Under federal regulation, a bank is required to hold levied funds for a 21-day period before releasing them to the IRS, giving you a specific, known window to resolve the underlying tax issue. Court-ordered garnishments similarly tend to follow a defined timeline set by the issuing court. A SAR-related freeze is genuinely different because it has no equivalent built-in deadline. How long this can actually last. Here's the part that's honestly the hardest to hear. No federal statute sets a hard outer limit on how long a bank can maintain a suspicious activity-related freeze. The actual timeline depends heavily on two things: how quickly and completely you're able to provide documentation the bank is asking for, and how backed up that particular bank's internal compliance department happens to be at the time. Some freezes resolve within days once satisfactory documentation is provided. Others, particularly involving larger or more complex transactions, can stretch on for weeks or longer while an internal investigation runs its course. This uncertainty is exactly why the earlier point matters so much. The bank employee you're speaking with often isn't being difficult on purpose. They may be operating under the exact same restriction you are, unable to tell you what's actually happening, and in some cases, not fully read into the specifics themselves. What you can still do, even though the bank's hands are legally tied in what they can tell you, you're not entirely without options. Ask directly, And specifically, what documentation would help resolve a hold you see without asking why the hold exists in the first place. A bank generally can't tell you your account is frozen because of X, but many can still tell you, in general terms, what kind of documentation tends to resolve holds faster, proof of the source of specific funds, an explanation of a large or unusual transaction, identification documents, or records showing a legitimate business purpose behind an activity that looked unusual from the outside. Provide clear, organized documentation proactively rather than waiting to be asked for each piece individually. If you know a particular transaction was large or unusual, a home sale, an inheritance, a large gift, having supporting paperwork ready before you're asked for it can meaningfully shorten the process. Escalate through the bank's formal channels if the freeze drags on without resolution. Most banks have a compliance department separate from frontline customer service, and asking specifically to have your case escalated in writing creates a documented record of your attempts to resolve it. If the freeze creates genuine, serious financial hardship, you can't pay for medication, rent, or other essential needs, say so explicitly and ask whether any partial release of funds is possible for documented essential expenses while the broader hold remains in place. This isn't guaranteed, but it's a reasonable, specific request worth making rather than assuming nothing can be done. If a freeze is prolonged and genuinely unresolved after weeks of good faith effort on your part, this is a situation where consulting an attorney who specifically handles banking or consumer finance disputes is worth the cost, particularly if the frozen funds are significant, or if the freeze is creating real hardship that isn't resolving through normal channels. This law exists for a genuinely serious purpose, stopping people engaged in real financial crime from being tipped off and moving money before investigators can act. But that same law means completely innocent account holders can find themselves in a frustrating, confusing freeze with almost no real-time explanation, simply because the reporting and confidentiality system doesn't distinguish between the two situations in the moment. If this happens to you, the most useful thing you can do isn't demanding an explanation the bank legally can't give. It's providing clear, thorough documentation as quickly as possible and escalating formally if the process stalls. That's genuinely the fastest path through it, even though it doesn't feel like it in the moment.